The pension fund crisis continues to unfold, and I'm here to bring you the information that you need to know. Take a look at what's been happening with the pension funds. Everywhere you turn, we've got issues, and it doesn't have necessarily some specific element with the pensions. It's because of the way that this system works. I'm going to show you how your retirement account are being affected by the market movements of today. The first thing I want to talk about is this pension fiasco. The second thing I want to look at is company prices, what they are doing to not just increase the price, but kind of hide it. Shrinkflation is one of those. And the third thing we need to look at is your coffee. It's about to taste a lot worse. Yes, that's right. We'll get into all of that and more. Let's begin. So let's start right here. This article and the next one I'll show you has some different information about the pension funds. And remember, whenever we're talking about the pension funds here, think about how it applies to retirement accounts in general, because a lot of people have their whole retirement plan around what's going on with their pensions, their 401ks, IRAs, supers, their RSPs, wherever they are, some sort of nest egg that's truly being there to support them while they lose their primary income. Retirement for some. The state pension funding gap plans have stabilized. That's right, stabilized here. So they were digging themselves deeper and deeper into a hole every single year. And then came 2020 to 2021 with largely record-breaking gains in the stock market. Now, this article is just talking about how fantastic things are, and things are so great on many levels. I'm going to mention a couple things from it. Long-term expected average annual returns continue to decline. I think that's important to note. Total pension plan returns, you could see that over the next several years, this is expected to go down. Growth will slow down. Employer pension costs in 4 states, Illinois, Kentucky, New Jersey, Pennsylvania, have collectively experienced a 300% increase in employer pension costs since the financial crisis. But let's go a little bit deeper. WirePoints, who's my source for a lot of this information when we talk about pensions, specifically with Illinois, and my friends in Illinois, I want you to share any inside information. And for that fact, anybody who has anything related to the pensions, please put it down in the comments below. Do you think the pensions will be there when you or your children or your family members, friends, when they need it? Let's talk about it. Pritzker administration sloughs off Illinois pension liabilities, passing $500 billion mark, disassembles on the pension crisis again. There's a lesson here not only about Illinois pensions, about how easily the press will let Pritzker thumb his nose at the crisis. We reported that the total unfunded liability for Illinois state and local pensions passed the $500 billion mark. That includes healthcare liabilities. Yes, that's right. Well, they're constitutionally guaranteed just like pensions. They mention that here the average debt burden is $110,000 per household. They want to blame the particular individual in government, but of course we know that it goes a lot further, a lot deeper than that. In 2019, he said that the buyouts will save billions and billions, perhaps $25 billion. But he's never produced that study or supported the claim. Going down a little bit further, check this out. They pushed an analysis. We wrote about in 2019, actual results showed savings to the state pensions of just $13 million. For a little perspective, that's less than 0.2% of what taxpayers contribute to the pensions each year. So there's the promises and there's the delivery, okay? And essentially, they tried to get the FOIA, Freedom of Information Act requests out there. They returned nothing to them. That's the way it works. Okay. And essentially just looking at this, trying to understand how in the world will they ever be able to pay back what they owe? People are expecting this money. You can read all this, it's politics and so on. Yeah, I get it. But this is what I'm worried about. America's biggest pension fund, CalPERS, votes to reshuffle allocations, add leverage in bid to combat low inflation. You've got problems. What do? Well, that's right, you add leverage to it. Well, of course, that doesn't end well. And that's unfortunately what they will have to do in Illinois when next year they start to dig themselves in a hole again, in Kentucky, Pennsylvania, all these other places. And it's never a good thing. And I don't know what else to say to people except to be ready. Be ready for them to say, we're going to slash these pensions. We are going to pay you less than what we told you you would get. And that's simply a matter of fact. Now, I want to break this down really quickly here in the Money GPS Insights. Right now at this time, pension funds are resorting to using leverage in order to achieve the returns that they have promised. And this is never a good sign. Let's be honest, pensions have absolutely no way to pay up in the end. This is something that I think everybody should be paying attention to. My message to you is, of course, to do your best. Try not to rely on a fixed income. Reduce your expenses and increase your income any way that you possibly can. For some, maybe it's not possible, but really sit down, pen to the paper, and try to do your best to make some changes, because at this time, I think we have to really wonder what the future has in store. Take a look at this article out of the Wall Street Journal, how companies raise prices without raising prices. Now, of course, shrinkflation, something we've talked about many times before. They mentioned some other factors here. I just wanted to just quickly go over that. These are some common ways that the companies are raising, but doing so covertly. Unbundling services, lowering product quality, and devaluing reward programs. So all the little pieces are essentially being eliminated. And they're talking about plane tickets. So for instance, that plane ticket might still be $400, but you just get a seat. You don't get the little snacks, and you don't get a water or drinks or anything. You just get to sit in that seat for that flight. So technically the price is the same, but for the same level of service, not exactly. Shrinkflation, the quantity surcharge, you've talked about all of this. I've seen your comments in the comment section. My goodness, what they do to people. I've seen the pictures that people have sent me. I've seen all kinds of things, and it is so true, and it's going on everywhere. Disappearing deals and coupons. I've talked about this as well. The sunk cost of memberships. Consider the following comparison. Which one is cheaper? A 64-ounce container of mayonnaise at a warehouse club that costs $7.99, or a 48-ounce bottle of the same brand at a supermarket for $5.94. Most will guess it's the warehouse. If you do the math, the price per ounce is roughly the same. So there's just getting into details how they suck people in to certain things, making them think that they're getting a better deal, but sometimes that's actually not the case. So look at this, from good to better, from better to worse, talking about the way that they price things and the way that they sell things and market things. Anyway, lots of different things. But I think it's important to talk about the effects of all of this on you. What's happening with inflation? What's happening with the supply chain? And why is my coffee about to taste a lot worse? Check it out. Get used to expensive coffee, and it'll probably taste worse too. The global shortage of Arabica coffee beans is tempting roasters to swap in the harsher Robusta variety. Oh my goodness gracious. My friends out there who love their Arabica, you know what's been happening with the price, and they're saying because Robusta beans are cheaper, they're going to start replacing that. Now, I will say, my friends on the live videos know, the Robusta makes a better crema, but I do agree, it's more susceptible to mold. It's not necessarily the best taste overall. You can get a nice blend and get a good coffee, get a beautiful espresso, but let's be honest, that Arabica makes a good coffee, okay? Here you could just see the frost. That's in Brazil. Talked about this before. This affects the crops for obvious reasons, pushes the prices up. Supply chains already got issues. On top of that, crop failures, not a good thing, okay? Arabica bean prices have spiked about 80% this year. So some of that is gonna make its way. Remember, it's when you get a package of coffee, if it goes up 80% as the raw bean, it doesn't mean the price is going to increase 80% on your end. Coffee may make up 10% of the actual total value. It might be 20%, it might be 50, whatever it is. But you have to understand that, okay? Because there's the roaster, there's the shipping, there's the all types of different things. And you could see right there what has happened, okay? It's pretty obvious. Prices are going up, they will affect you. And some people would say, oh, I'll switch from the Arabica to the Robusta so that the price is the same. But it's really not the same because you've changed the product. Steel prices could trend much higher compared to the last 10 years, major Indian steel maker says. This is something that just goes in line with everything else, like lumber. This is just a chart just to give you a little example of what's been happening and what people have been doing. They've been buying this. I've heard from so many people that have been buying firewood to heat their homes, as a sort of just in case, as an emergency as well. And this has been going on all over the place. I completely understand why people are doing this right now. Must get ahead of everybody else. This is lumber. The price has skyrocketed once again. It is now at approximately 800. 800. I'm looking at this on 3 different time frames. If you look at the left one, that's the daily time frame. Over 800 right now. It peaked out at 1700, came down to about 450, and we are now almost, think about it, it's almost double from that bottom. Now it's looking technically oversold on many different indicators, but I just want to show you that. I think it's important to look at the ups and downs. This right here really quickly, just showing you long-term market bull. Jeremy Siegel expects a serious pullback that isn't tied to what's going on in the economy and so on. His tipping point, a drastic change in the Federal Reserve policy in order to deal with hot inflation. If the Fed gets tight, that is going to impact the markets. The markets are loving what's happening today. You're seeing a surge in just about everything. Buy coffee, buy lumber, buy the S&P. It's all going up. However, there could be a change here in that, and we'll talk about this more. I got to talk about it more because there is a serious potential change that the market has absolutely not priced in. Very key to understand. So what are people doing? You stayed until the end, you get the good stuff. This comes from Real Investment Advice, one of my favorite sources, and they're just giving you a portfolio update. And they go to a 60-40 split. The way they split that is US equities, almost 60%, and then ETFs and cash, about 20% each. And they are overweight, you would say, in cash simply because of the uncertainty, but they are not going risk off. They're ready with their finger on the trigger, but they're not going risk off at this time simply because things are crazy. They're paying close attention. They're watching out. They've got a decent cash portion, but they're just being very, very cautious about what's happening with the markets right now because of the FOMO, as they talk about, the fear of missing out, is really pushing things to higher levels. So there's so much here. I only scratched the surface, but I wanted to bring that to you. I hope that you do appreciate this. If you do, hit the thumbs up button. By clicking that button, you support the channel as well as you notify everybody out there in YouTube world that this is a good video. You don't even have to share it with your friends and family if you don't feel comfortable. By hitting that thumbs up, you automatically notify the algorithm to do that. So thank you very much. If you haven't seen this video yet, you definitely want to check it out. Click it and I'll see you there.